What's up, Behind the Rich family? This is Ken, and today we're diving into one of the most fascinating stories unfolding in the investment world right now. Silver just hit record highs above $58 per ounce in late 2025, and some analysts are predicting it could reach $100 per ounce by the end of 2026. But here's the kicker. The exact same conditions that made Warren Buffett hundreds of millions of dollars on silver in the late 1990s are happening again right now. I'm talking about a supply-demand crisis that's been building for 7 consecutive years. I'm talking about industrial demand hitting all-time records. And I'm talking about inventory levels so low that the London Bullion Market Association, the world's largest silver trading hub, nearly ran out of physical silver in 2025. Before we go any further, if you're new to Behind the Rich, hit that subscribe button. We bring you real financial analysis, verified facts, and insights into how the ultra-wealthy build and protect their fortunes. No hype, no fake news, just the truth about money. Today, we're breaking down exactly what Warren Buffett saw in silver, why those same conditions exist today, and what this means for investors in 2026. Let's get into it. Ken. Let's start with history, because understanding what Buffett did in 1997 gives us the blueprint for what's happening now. Between 1997 and 1998, Berkshire Hathaway, Warren Buffett's company, purchased 129.7 million ounces of silver. To put that in perspective, that represented about 25% of the entire world's annual silver production at that time. This was a massive, market-moving purchase. But here's what most people don't understand. Buffett didn't buy silver because of some technical chart pattern or because he was betting on inflation. He bought it for one simple reason: arithmetic. In Berkshire Hathaway's 2006 annual presentation, someone asked Buffett how he assessed the value of precious metals. His answer was revealing. He said global demand for silver was outpacing supply by about 100 million ounces per year. Silver was out of balance, he explained. Now, for most commodities, when demand exceeds supply by that much, prices skyrocket immediately. But silver had one anomaly. There were enormous quantities of above-ground inventory that could be drawn down to meet demand. Buffett recognized this inventory was falling materially, and once it depleted, prices would have to adjust. He was right. Buffett made $97 million when he eventually sold that position in 2006. And by his own admission, he sold too early. He could have made much more. The key lesson here: Warren Buffett doesn't invest based on emotion or momentum. He looks for structural imbalances in supply and demand, and he acts when the math is overwhelmingly in his favor. So the question we need to ask is, are those same conditions present today? The answer, according to multiple research institutions including the Silver Institute, Metals Focus, and Sprott Asset Management, is a resounding yes. Ken. Here are the facts about the silver market in 2025 and early 2026, verified by industry research. Fact number 1. The silver market has been in a structural deficit for 7 consecutive years, from 2019 through 2025. According to the Silver Institute's 2025 World Silver Survey, the cumulative deficit since 2021 has reached nearly 820 million ounces. That's the equivalent of about 1 full year of global mine production. Fact number 2. In 2024 alone, the deficit was 149 million ounces. For 2025, it was projected at 95 million ounces. These aren't small imbalances. These are massive shortfalls between what the world produces and what the world consumes. Industrial demand for silver hit a record 680.5 million ounces in 2024, marking the 4th consecutive record year. For 2025, demand remained near 700 million ounces for the first time in history. Now, you might be thinking, Ken, if there's been a deficit for 7 years, why hasn't the price exploded sooner? Great question. Just like in Buffett's time, there were massive above-ground inventories that could be drawn down. But here's the critical part. Those inventories are now critically low. The London Bullion Market Association, the world's largest silver trading hub, saw its silver inventory drop by 71 million ounces in January 2025 alone. That's a 10% drop in a single month. From its 2021 peak, LBMA inventory has dropped by more than 400 million ounces. Similarly, COMEX silver inventories in New York are down 70% from their 2020 peak. Bloomberg reported that India's largest precious metals company sold out of silver for the first time in its history in 2025. This is exactly the scenario Buffett predicted at his 2023 Berkshire Hathaway shareholder conference. When asked about silver, he said that the world was consuming about 150 million more ounces per year than it was producing. He predicted that a new equilibrium would have to be established, either through reduced demand, increased supply, or higher prices. Buffett effectively ruled out the first two options. Industrial demand remains robust because of technology needs. Supply is inelastic, meaning production can't easily increase because silver is mostly a byproduct of other mining operations, not the primary target. That leaves option 3, higher prices. And that's exactly what we're seeing. Ken. Now let's talk about why silver demand is not just high, it's accelerating. Silver has a unique position in the commodity world. Unlike gold, which Buffett has consistently criticized as neither of much use nor procreative, silver is an industrial workhorse. Here are the key drivers. Silver is the most electrically conductive metal on the periodic table. That makes it essential for solar panels. In 2024, solar panels consumed about 197.6 million ounces of silver. For 2026, projections suggest solar could require 120 to 125 million ounces annually. As the world continues its green energy transition, this demand only grows. EVs and their charging infrastructure consumed approximately 70 to 75 million ounces in 2025. Every electric vehicle contains significantly more silver than traditional cars due to electric motors, battery systems, and power electronics. Artificial intelligence and data centers. The AI revolution is creating unprecedented demand for semiconductors and advanced electronics, all of which require silver. Data centers powering AI systems need massive amounts of electrical infrastructure, and silver's superior conductivity makes it irreplaceable in many applications. As countries upgrade their electrical grids to handle renewable energy and increased electrification, silver demand from grid infrastructure and transformers continues to climb. Silver's antimicrobial properties make it essential in medical devices, water purification, and healthcare applications. It's used in ethylene oxide catalysts, which are critical for producing plastics and other industrial materials. The key point here is this: industrial applications account for 59% of all silver usage. This isn't speculative demand that can disappear overnight. These are structural, long-term trends driven by technology transitions that will take decades to fully play out. According to Sprott Asset Management's mid-2025 outlook, silver mine supply has actually declined by 7% since 2016, even as demand has surged. New mine production isn't keeping up because less than 20% of silver comes from primary silver mines. Most is a byproduct of copper, lead, zinc, or gold mining. So you can't just produce more silver when prices go up. Ken. So what's happened to silver prices? In early 2025, silver was trading around $28 per ounce. By December 2025, it had surged to record highs above $58 per ounce. In early 2026, futures contracts have pushed above $85 per ounce, marking new all-time highs. That's more than a 100% gain in less than a year. For comparison, gold, which has also performed exceptionally well, is up about 60% over the same period. Silver is massively outperforming. Several major financial institutions have raised their price targets. Bank of America raised its 12-month target to $65 per ounce. BNP Paribas suggests silver could reach $100 per ounce by the end of 2026. Metals Focus, the research firm behind the Silver Institute's annual survey, expects prices around $60 per ounce for 2026. Now I want to be clear. No one can predict prices with certainty. Silver is volatile. There will be pullbacks. But the fundamental supply-demand imbalance strongly supports higher prices over the medium term. Here's another fascinating angle. In 2023, at a Berkshire Hathaway shareholder conference, Buffett laid out his 3 possible outcomes for silver. 1. Demand falls. 2. Supply increases significantly. 3. Price rises substantially. He ruled out options 1 and 2 based on structural realities. That left option 3 as by far the most likely outcome. According to an article in The Motley Fool from December 2025, titled "Warren Buffett's Silver Prediction Has Come True," Buffett's forecast was accurate. The new equilibrium has arrived in the form of a roaring bull market for silver. Keen. Here's where things get really interesting. Warren Buffett stepped down as CEO of Berkshire Hathaway on January 1, 2026, as planned. Now, Berkshire has been a net seller of stocks for 3 years straight and is sitting on a record $381.7 billion cash pile. Some analysts are speculating, and I want to emphasize this is speculation, not confirmed fact, that Buffett may have made one final silver purchase before retiring, just like he did 30 years ago. A Motley Fool article from January 2026 titled "Prediction: Filings in February Will Show Warren Buffett Made One Investment for the Third and Final Time" suggests that when the mandatory 13F filings are released on February 14, 2026, they might reveal a silver purchase. The reasoning is compelling. Buffett has bought silver twice before, once in the 1960s and again in 1997. Both times were driven by supply-demand imbalances. The current situation in 2025-2026 mirrors the 1997 setup almost perfectly. Given Buffett's enormous cash position and his track record with silver, some believe he couldn't resist taking what one analyst called a layup on such a straightforward opportunity. But here's the thing. We won't know until those filings are released. This is speculation based on pattern recognition and market conditions, not confirmed information. What we do know for certain is that professional traders are positioning for higher silver prices. Silver call options volatility jumped to the highest premium over put options since 2022, indicating a surge in bets on higher prices. So what should you take away from all this? First, Warren Buffett's approach to silver investing was based on fundamental analysis, supply, demand, and arithmetic. Not speculation, not technical trading, not momentum. He looked for structural imbalances where the math overwhelmingly favored one outcome. Second, those same structural conditions exist today. 7 years of deficits, record industrial demand, depleting inventories, and inelastic supply create a compelling fundamental case. Third, this is not financial advice. I'm not telling you to buy silver. Every investment carries risk. Silver is volatile and can experience significant price swings. You need to do your own research and consult with financial professionals who understand your personal situation. What I am telling you is to pay attention to what's happening and understand the forces at play. If you're interested in silver exposure, there are several ways to access it. Physical silver bullion, coins or bars, silver ETFs like the iShares Silver Trust, SLV, silver mining companies like First Majestic Silver, which focuses primarily on silver production, silver futures contracts, for sophisticated traders who understand the risks. Each method has different risk profiles, costs, and tax implications. Fourth, the broader lesson here is about contrarian thinking. Buffett made his original silver purchase when prices were depressed and sentiment was negative. He sold when prices had recovered. The best opportunities often come when others are fearful or when everyone else is looking elsewhere. Fifth, understand the difference between price and value. Silver's price fluctuates daily based on sentiment, technical factors, and short-term supply disruptions, but its value is determined by its usefulness in technology, its role in the green energy transition, and its limited supply. So here's the bottom line for Behind the Rich viewers. The silver market in 2025-2026 presents the same structural setup that Warren Buffett exploited in 1997-1998. Demand exceeds supply. Inventories are depleting. Industrial applications are growing. And prices are adjusting to reflect this reality. Whether Buffett himself has taken another position in silver, we'll find out soon when those regulatory filings are released. But regardless of what Buffett did, the fundamentals speak for themselves. The silver story is a masterclass in value investing principles. Identify structural imbalances, do rigorous fundamental analysis, act when the math is in your favor, be patient and think long-term. Don't be swayed by short-term volatility. If you learned something valuable today, do me a huge favor. Hit that like button, subscribe to Behind the Rich, and share this with someone who needs to understand what's happening in the precious metals market right now. Drop a comment below and tell me, do you think silver is heading to $100 per ounce in 2026? Are you considering adding silver to your portfolio? I read every comment and love hearing your perspectives. And remember, the Behind the Rich mission is simple. We bring you verified information about how wealth is built, protected, and grown. No hype, no fake news, just real analysis based on facts. I've got more incredible content coming your way, including deep dives into how billionaires are positioning for 2026, the AI investment boom, and strategies for protecting wealth during economic uncertainty. This is Ken from Behind the Rich. Stay sharp, stay informed, and keep building your wealth the right way. I'll see you in the next one.